So today, let me give you certain very important points to remember in case of partnership dissolution. You know, partnership dissolution means the business is broken and the assets will be sold out and liabilities will be paid. Then if there is any partner's loan, that will be paid. And after that, whatever amount is left will be paid to the partners against the capital. So this is the background, partnership dissolution. So I'll be making a very short video for those who did not come to the class. Very short video, 4-5 minutes. So the basic points you can remember, and later on I can extend the video for other classes. So first, see points to remember. Points to remember in case of dissolution of partnership. What happens in dissolution, as I have told, that the partnership is broken and partnership is ultimately the assets are sold out. Because business is not there, business is closed. The assets are sold out. And assets are sold out and liabilities are paid, I told you. And for that, just remember very simply what are the accounts to be made. Remember that way. Basically, these 3 accounts are to be made. And these 3 accounts are in the ledger. And if you know ledger, you can do journal. If you know debit credit, you can do ledger. There's no problem. I'm showing you the ledgers only. But sometimes there may be journal also. But basically remember, there are 3 ledgers mostly important. There may be partners loan and other things, but mostly the realization account. Please remember, this account you have to make the realization account. And you have to make one partners capital account. There may be more than 2 partners also. So in the partners capital account, both sides give as many columns as many number of partners. So 3 partners, 3 columns, like that. I'm telling it for very basic knowledge for those who want to start. So 5 partners, 5, like that. 2 partners, 2, like that. So you can make this partners capital account and you have to make a bank account. Because mostly these transactions are done in bank. Now, how to do it? So these are the basic 3 accounts. Maybe some 1 or 2 more accounts, but generally these are the basic 3 accounts. So how to do it? See, a balance will be given to you on a particular date and some adjustments will be given to you. I have a formula in this. पहले बैलेंस शीट को तोड़ो, फिर एडजस्टमेंट से नाता जोड़ो. I told it, I often said like this. पहले बैलेंस शीट को तोड़ो. It means whatever is given in the balance sheet, first transfer to the respective accounts wherever it goes. And then adjustments in Nata Joro, which means whatever is given in the adjustment, you give 2 entries. And there may be some hidden adjustment also, you have to give 2 entries. So I'm not giving any question here, practical, but suppose question is here how to do it. From the balance sheet, first to make the balance sheet account. And one more thing, remember, you make all the accounts together. It is not that you make the balance sheet account complete and then now partners capital account. No, not like that. It's not a good system. Because if there is a mistake, then you lose a lot of time in exam. So you make the accounts, whatever you know, you make the accounts, all accounts you make. And now come to the balance sheet. From the balance sheet, let us take the liability side. The liability side, capital is there. So in capital account, you write by balance BD. And you give tick in the balance sheet. Because if you don't tick, then you'll forget it. It's a basic point to remember. So capital account. Suppose there is some reserve in the balance sheet. Reserve means part of the profit kept for future, reserve fund, etc. This will also be transferred to capital account and in the profit sharing ratio. Say capital account by reserve or by profit loss account, the profit by reserve fund, it will go to the capital account credit side. And then in the liability side of the balance sheet, suppose there is creditors, bank creditors and bill payable, outstanding expenses, any liabilities. Those liabilities will be going to the realization credit side. Balance sheet, credit, liability side, items of liability will be going to the credit side of the realization account, right side. And suppose in the balance sheet, left hand side there is bank overdraft. You put it in bank account by balance BD. Because credit. Bank overdraft in bank account. And in the assets of the balance sheet, all assets will be coming to the debit side of realization account. In the debit side, all assets will be coming. But suppose in debit side, in the asset side there is cash, it will not come to realization account. It will be deposited into bank. You have already made bank account. If there is cash in hand in asset side, put to balance BD. If it is cash only in the asset side, in bank account you write to cash. It means whatever cash you are having, you deposit in the bank. That is the meaning. So a time will come, you find that there is nothing left in the balance sheet. I told you balance sheet ko toro. Every item of balance sheet has to be transferred to respective accounts. That is the system. And then come to adjustment. In the adjustment, it will be given assets are sold at this price. So when assets are sold, you write bank account debit to realization account. So in bank account debit side, you write to realization, assets realization. And in realization account, you write buyback, opposite double entry. And liabilities. Suppose liabilities are given in the adjustment, you have to pay the liabilities. Suppose creditors, bill payable, outstanding expenses. So if they write, you pay 2% less or more or whatever direction. Accordingly, you pay the liabilities. So what is the entry? Realization account debit to bank. So realization debit side you write to bank, and bank credit side you write by realization. Suppose you are paying creditors. So realization debit side you write to bank, creditors paid. And the bank you write by realization, creditors paid. Now one more most important point. Okay, one more point. Suppose realization expenses given in the adjustment. So write in the relation to bank expenses paid or relation expenses paid. And the bank by relation dash expenses paid. But most important problem here is that many good students, brilliant students, they forget certain points. Suppose a creditor is given in the balance sheet and nothing is mentioned in the adjustment. Then also you have to pay it. If it is mentioned in the adjustment, you remember, oh, I have to pay double entry. But sometimes, suppose bill payable is given in the balance sheet liability side. So from liability side, you have taken it to relation credit side. That is done. But in the adjustment, nothing is mentioned about the payment of bill payable. But you have to pay. Remember, that's what people forget. But another problem is that even if you forget, ultimately bank will be telling, question will be telling. It will be agreed, but marks will be deducted. So how to remember? You remember this way, your balance sheet was given to you. Think you are the partner, you are the owner of the business. Think that way. You are doing your own business. Then you can remember, as assets are sold and money is received, liabilities have to be paid, even if it is not mentioned in the adjustment. Liabilities have to be paid. First, liability will be coming to the relation credit side, say buy creditor, buy bill payable, buy outstanding expense, like that. Then nothing is mentioned in the adjustment, but you have to pay it. You have to pay it means how entry? Realization account debit to bank account. This is the journal entries. If you know journal, you can make ledger. Sometimes you know journal also comes in the exam. Debit journal, this also comes. But you have to know the concept, then you could pass journal. If you know journal, you can make all these ledgers. Ultimately, realization account, difference between two sides will be profit or loss. If left side is less, profit to share of profit, and then profit will be going to partner's credit side. If relation right side is less, then loss by share of loss. If you go to debit side of partner's credit account, ultimately relation will be closed, and then you will try to close capital account. Whatever difference in capital account will come, do not write balance sheet or meaning something like that, because business is not there. How can there be balance? So in this chapter, when you close the partner's capital account, suppose debit side is less, you write to bank. Credit side is less, buy bank. It means in the partner's capital account, if debit side is less, credit side is more, it means that you have to pay money to the partners. Or if credit side is less, then partners have to bring money from home and give to the business. Whatever may be, no need to think so much. In partner's capital account, suppose debit side is less, at to bank, credit side is less, buy bank, and this to bank, buy bank, whatever may be, you transfer to bank account. Accordingly, other side, opposite side. Ultimately, last your bank account will be telling equal if everything is correct. So to make everything is correct, you do one thing, just remember that while a balance sheet ko toro, means whatever given the balance sheet, take it to the respective places in the accounts. And then adjustment se nata joro, how beautiful. जोड़ने के लिए दो चाहिए ना, so adjustment do it. That's why I say this way, my students remember. So you practice also, I take this class. Thank you.